In fact, he had the way you just quoted, Nikunj, that he had seen multiple cycles also during his entire investment journey. And then he also has an art of differentiating that is it a risk profile or is it just a volatility? Many cycles he's seen for many of his companies in his portfolio.
So again, you have to ask a very basic question, that what's the difference between risk and volatility? What is risk? Risk is loss of capital. Yeah. What you've invested in.
A wrong business maybe.
Loss of capital. Why would you lose money? You would lose money if the business goes wrong, if the competitive intensity of the business changes, or the price at which you bought, the price is not attractive enough which can justify the underlying value of the franchise. Sure. That is the risk. Volatility could be a function of a variety of factors. For example, COVID caused volatility in the market. 2008 caused volatility in the market. 2000 caused volatility in the market. But when you see these periodic bouts of volatility, they actually are a friend. Any business, and that's what stock market are, they will go through bouts of volatility. But when stock prices go through bouts of volatility, businesses may not go through bouts of volatility. I'll give you a classic example where I know that Govind in a sense was used this volatility to his advantage, was what happened post demonetization.
Yes.
The market fell, and especially mid and small cap stocks, they in a sense really went into a tailspin post demonetization, post IL&FS crisis. The sentiment on the street changed. But for some of his businesses like Sundaram Finance, even though the entire NBFC space was hit because liquidity got really squeezed out of the system post the IL&FS crisis, all NBFCs, they came down with the same wave. Sundaram Finance is one franchise which was able to really withstand the volatility which came in the lending market because they had mechanisms and that system in place.
Sure.
Sundaram Finance has always been very conservative in lending. The risk management has been extremely efficient. So the mantra is very simple: differentiate between risk and volatility. He's always said, and I think this is something which even Buffett has said, that when a good business goes through a temporary downside, that's the time you buy. The most important moving part, Priyanka, is sentiment.
Sure.
Which changes every day.
Yeah.
When you go home at 3:30 and when you come back next morning, the prices, they change. Does the business change? No. But prices, they change. That is because sentiment, it changes. In the short term, it is sentiment. In the medium term, it is liquidity. In the long term, it is earnings. In great businesses, irrespective of what the tide is, they are built to last. And those businesses don't change. And a smart buyer like Govind has always said that when the sentiment is bad, I will always be a buyer. Yeah. When there is a sale, or discount sale lagti hai na,
right.
You're always a buyer, right?
Yeah.
That same approach should be there in stock market.
Right.
Unfortunately, in stock market, higher the prices are, more the demand is.
Yeah.
But for a long-term investor, it should be the other way around. The more prices come down of a good business, you should actually be a buyer.
Better the prices, yeah.